Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, today we're going to talk about Zillow's 1% down mortgage.
Woohoo!
You only put 1% down. We've got a bunch of data and analysis that we're going to do. But what we'll do is we'll start with reading the headline of the article. Okay? The housing market has gotten so unaffordable that Zillow is now offering prospective home buyers a 1% down payment option.
So this makes so much sense because there are so many homes sitting on the market that that they have to take drastic action to get the home sold, right?
Right. Okay, there's a lot of, this actually does this much, okay?
Oh, you gave it away.
To help affordability. Doesn't do anything. So we're going to go through some of the articles, okay? Okay, the company is offering prospective home buyers the option to put 1% down payment on a house. We already told you that, okay? All right. Now, Juana, there's some caveats with this 1% program.
Well, yes. You know, it's on an even year, odd month.
Right.
Leap, only 28 days, full moon, during an electrical storm, and you have to make under a certain amount of money.
Last name has to start with the letter Z. Okay, we're going to go through some of the bullet points in the article, but this actually, the reason why we did this is because I'm in a chat group with a bunch of tech people, and they normally talk about tech, and of course, Juana and I are investors in a bunch of tech startups, but they start talking about real estate, and this came up, and they really don't. It's pretty funny when you really understand an aspect of the economy, and other people don't really understand it, and they have these generalizations, and the way they were talking about this, right? So here that you realize, like, people just sometimes have the misperceptions. But here's a quote from the article. Analysis by Zillow Home Loan shows that reducing the down payment burden to 1% of purchase price, a homeowner looking to purchase a $275,000 home in Phoenix, Arizona, who makes 80% of their area's median income and saves 5% of their income, would only need 11 months to save for the down payment, Zillow said. So there's a bunch of numbers in there, Wanda. Let's go over these. First of all, let's talk about the 1% purchase price.
Okay, so the 1% down payment, that's all fine and good. But remember, the less money you put down, the higher your mortgage payment is going to be because the higher your principal balance. So while this may be on the surface solving a problem, it's actually creating a much bigger problem on the back end, right? Because the down payment is pain on the front end, but then the higher payment is long-term pain. So that's a consideration.
So what you're saying is their program makes the monthly payment even more unaffordable because you're not putting enough down.
Yes.
Okay, that's the first thing. Here's the second. Okay.
The next thing was that they make 80% of the median income in that area. So without being in any way judgmental or disparaging anybody, these are people that have insufficient income to qualify for regular loans, which is part of the reason why they're trying to attract them. But who are these people competing with? These people are competing with investors who are going to be paying cash because these are lower end homes, obviously. And because they're lower end homes, investors are more likely to want to come in and purchase them, and investors buy cash. Now, if you are a seller, are you going to want to deal with somebody with a 1% down payment, or are you going to want to deal with somebody who's going to pay cash for the house? And there's not going to be any drama, no hiccups with the loan. It's going to be quick, easy, and painless. So if you're a seller, you're probably going to take that cash offer. So these people that this is supposed to benefit, they are going to be outbid almost every time by someone else. Even if it's somebody else doing an FHA loan or a VA loan, those people are going to be better qualified than these people because they generally will have a better credit score. They'll have more down payment, more skin in the game. So that's the other portion.
Okay, so I'll go into a deep dive on some of this.
Okay.
The program, first of all, it's been around for a long time.
Mm-hmm. Oh, and it doesn't belong to Zillow, so let's start with that.
It doesn't actually belong to Zillow. Zillow's basically farms it out to another company, and then they try to get you to use one of their premier agents, who's not an agent who works for them. They basically tell the agent, we'll give you this client, and then at closing, we want 30 to 35% of the commission back as a referral fee to us because we gave you the client. Okay, that's the first thing.
Okay, so keep in mind that this agent, it pays Zillow between $10,000 and $15,000 a month to get these client contacts. And then at closing, they pay Zillow on top of that a third of their commission. So Zillow is very incentivized for these people to work with their agent. So this is a revenue stream for them. It's a huge revenue stream. So understand that Zillow is not doing this out of the goodness of their heart, nor is this a proprietary loan program for Zillow.
USA has the same program. They have a similar type program where they give you like a kickback or something at closing, like they buy appliances or they give you something, but you have to use their agent.
And it's the same kind of scenario where that agent pays USAA.
Yeah, the agent pays USA like 35%. Right. So, and then they take some of that and give it back to the client. And if you want to use a different agent or whatever, you can't. You have to use the one they assigned you. Okay, here's the other thing. This program only is for people who make 80% or less of the area's median income. So let's say the median income is 50 grand. If you make 43,000, you don't qualify. You make too much money. Okay. The other problem is that in the article it says, hey, look, if you save 5% of your income and then 11 months from now you'll have the $2,750, which is 1% down, right? Mm-hmm. The problem is if you're buying a house, you better have a lot more than $2,700 in your checking account.
Well, not only that, but remember your mortgage payment is going to be substantial because you're financing 100% of this at 7% and change, and you've got tax and insurance on top of that. So if you're that tight with the money, I don't know that buying a home is the first thing I would be doing.
Okay, here's another one. It said, by comparison, the similar home buyer saving for a 3% down payment would require 31 months to reach their saving goal. What they did is they intentionally took this, small amount to make it seem like, you have to save for 31 months. No, that's not true. The bottom line is if you're preparing to buy a house, you should have been saving for a long period of time. And you should also be living well within your means. So you shouldn't be you shouldn't be spending every penny you get, not having any money at the end of the month. That's just a bad way to go through life, right? So they're trying to make it seem like, hey, we're going to help these poor people who can't afford to buy a house. Now, here's the other problem. Like Wanda said, imagine this. You're a seller, and you're selling this $275,000. It used to be your home, but it's an investment property now, right? Which is probably the scenario we have Waterbug and a couple others that watch that are from Phoenix, right? They probably know the market. $275,000 is probably not in Scottsdale, on the bluffs overlooking the golf course, right? So $275, okay, and you get 4 offers. One offer's cash. You get another offer that's 50% down. You get another offer is 20% down. And then somebody writes you this 1% down, they barely qualify, the whole thing. It's going to, of course, now you've got an appraisal constraint. It's got to appraise. Mm-hmm. And you don't find that out for probably couple weeks down the road. Mm-hmm. So if you want it, if you're representing the seller, do you think the seller's going to want to even, they're not even probably want to consider that offer, right?
So if the seller has other choices, then no, there are better choices for the seller to consider.
Okay. What about having your home tied up by, pulled off the market for a few weeks by somebody who's, that's a risk, right? It's like, hey, I may not, and I've had people, someone put in the comments, why do you care? Like, why would the seller care if the lender says, how much down he's putting? Because that's on the lender. But the seller does care, right? Why does the seller care?
Okay, so there is a correlation between somebody who's putting a substantial amount of money down and their capacity to get a loan. So somebody who's putting, 30% down is probably has better means to qualify for a loan than somebody who's putting 1% down. I think this is just kind of logical, right? Somebody who's going to the store and purchasing things is better off than somebody who's having to, put it on layaway, right? It's kind of the same kind of thing. So I, as a listing agent and as a seller myself, I look for the person who's going to be most likely to close the transaction. And somebody who has means is more likely to close a transaction than somebody who does not.
Okay, here's another thing. This is another quote from the article. So Zillow said it would contribute an additional 2% to the down payment at closing for qualified borrowers. It's not a payment to the borrower. This is the secret. It's not a 1% down. It's a 3% down loan. Mm-hmm. But the lender pays the other 2%. So where do they get the money? Well, one place they get it is the agent gives them money. Mm-hmm. That's one place they get it.
Right.
The other place they get it is on the back end, you actually pay a higher percentage.
You pay a higher interest rate.
Or a higher interest rate. And then they get something on it's called a yield spread premium on the back end. Mm-hmm. They get a kickback at closing from whoever originates the loan, because when they originate the loan at a little bit of a higher rate, they go, hey, the going rate's 7.3, but yours is 7.5. Don't worry about it. You can refinance in a couple years, but you only have to put 1% down. Then Zillow maybe gets 3% on the back end, mm-hmm. plus the agent gives them some money. Mm-hmm. They give 2% down on the thing, but they walk away from the deal with money. Mm-hmm. They make money out of this.
Right.
And like we said, every lender can already do this program.
Right.
Right?
Right. So this is just another revenue stream for Zillow. So good on them.
Okay. Now here is the final thing, because this kind of blew up today. Like a lot of people were talking about it in this group chat that I'm in with these tech. They're mostly tech entrepreneurs. But here's the big quote. The 1% down payment program for Zillow home loans is designed to reduce the time needed for consumers to save money for down payment. For now, it's only offered to eligible borrowers in Arizona, right. Though the company intends to expand the program to other states. Now, the reason in Arizona is because their premier agent program they have in Phoenix. Mm-hmm. So they have these premier agents in Phoenix that, they don't work for Zillow. They work for any, other real estate brokerages, but they basically give money to Zillow for leads. They have a financial relationship. What is really interesting to me, Juana, about this is the tentacles involved in this. So you have Zillow saying, hey, come to us to get your loan. We'll give you a 1% down loan, but you got to use our agent. And then, so the agent's getting a commission. He's giving money to Zillow. The buyer's getting a little higher rate. The mortgage company's giving money to Zillow. Now, all this gets disclosed on the HUD, but the average person's just like, oh, I could buy a house with $2,750 in the bank because I only need 1% down.
Right.
But in reality, it doesn't really solve a problem, Juan.
No, not at all. And like I was making fun at the start, but yes. So we are not in a market where we can't sell houses. Houses are selling, and they're selling, a third of them are selling with multiple offers. So that's really not a problem. And low-end houses are certainly not a problem to sell because investors are more than happy to purchase them. So again, this is not solving a problem. This is a fun video to do, and it's a fun discussion to have because, like Todd said, this is Zillow's way of trying to capture more of the market. And you may not need the 1% down, but this will get your attention. And then you may end up using Zillow's agent and using Zillow to finance and that sort of thing. And maybe you're putting 20% down, 30% down, and that's fine. But you still end up using these services, and Zillow makes money. So we just thought it was a fun discussion to have, to kind of point out Zillow's newfound way of making money. So we are not against making money. Okay, so just so we're clear on that, we're all for it, and we congratulate Zillow. This is great, but we just wanted to kind of shed some light onto what's going on, and we think that transparency is a good thing and information is a good thing. Well,
home flipping didn't work. They lost
$1
billion. They lost over. I think it was over $1 billion. I think there was 1 year they lost like 800 million trying to flip home. They couldn't make any money flipping homes, so they shut that down.
So if you think that we're knowledgeable about the market and you would like to engage our services in selling your house, feel free to reach out to us. Otherwise,
we're in Vegas.
We're in Vegas. So please, feel free to reach out to us, and we'd be happy to help you. Please remember to like the video, subscribe, hit the notification bell, share the video, leave us love notes, tell us where you're watching from, and be nice to one another in the comments. Bye.
Bye.